Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening. And Phil, since early June, the market has largely been trading sideways. So I guess the question is, will earnings season, which really starts in earnest this week, finally be able to provide some guidance?
Yeah, it's going to be a good question, isn't it? Because we're going to see which companies really are hurting and which companies are actually benefiting from coronavirus. But we're starting to see some of the CEOs already talk about the fact that any hope of a sharp V-shaped recovery doesn't seem like it's going to play out. And so they're worried that if we don't get the next rounds of stimulus approved here and in Europe as well, that some of the furloughs might become more permanent layoffs. And I mean, that raises a few extra longer term problems for the economy, because if people are long term laid off, then we have a more classic recession that we have to dig ourselves out of afterwards as well. But you're right, the markets have been kind of sideways on a balance of positive news like vaccine research being successful and negative news like some of the states reversing course on reopenings. And basically, as we get those news items, the market goes up, the market goes down, but we're net sort of neutralizing themselves for quite a number of weeks, really.
Let's take a look at some of the top ETF trends from last week, because just within a week time span, there was a reversal in some of these trends.
Yeah, I mean, we've been seeing the internet type space, a lot of the thematic ETFs that are involved in innovation funds or the tech sector or online retailing, seeing some pretty good inflows, lots of trading activity, and obviously positive returns. Seems to have reversed course last week. We've seen a lot of in our top 25 list, a lot of the tickers in that list are those same companies, but now with outflows and negative returns. And also in the list this week is China, which last week was pretty positive story. It had positive GDP, actually positive GDP, as in the economy is expanding year on year after Q2. So that was pretty amazing to see, but also proof that you could have a V-shaped recovery if China's data is really to be believed. And so that was a positive news story. A lot of inflows into the Chinese ETFs and the Chinese exposures that are offered by ETFs. But this week, that seems to have unwound itself as well. On the flip side, we're seeing some pretty old economy themes playing out. So we're starting to see a lot of those value ETFs in the list with inflows and some pretty positive performance. And the value growth shift we've talked about before, for a long time, growth has outperformed value. And as interest rates have gone down, the valuations of growth companies get easier to make higher multiples. So what we're seeing now is potentially a little bit of a catch-up trade, but also potentially someone positioning for a period where we start to get back to growth, rates start to normalize, and value starts to outperform. There's a few dividend funds in the list this week as well, obviously with the 10-year bond rate at 0.6%. If you want income, equities are starting to look like a better place to be for income alone, let alone for inflation protection. And then obviously the last trend that seems to be in there is a little bit of home construction and home builders ETFs picking up some activity. So obviously as people get back to normal-ish, some of the contractors that were laid off are coming back to work and they're starting to buy products again. So probably two good signs really in terms of the longer term outlook and what the ETF trading is telling us about the economy.
So let's take a look at the latest COVID-19 data. Would you say that we're starting to see somewhat of an improvement with social distancing and masks and the reversal of openings starting to take place in some of the southern states?
Yeah, I mean, we know that some of the southern states have actually implemented mask rules, if not obligations or guidelines. We know that people are starting to change behaviors, whether or not the rules have changed. We saw that happen in Europe. We saw that happen in the New York City data as well. So what we are definitely seeing in the data is it looks like a slowdown in new cases, a slowdown in hospitalizations, not negative yet. So not an improvement, but just a slowdown. So the sort of spike over 60,000 cases a day is still where we're running at in the US. We've just had a weekend, so we've got to be a bit careful of the dip in the last 2 days. But at least it looks like some of the measures people are putting in place are starting to work. And we know from historical comparisons, give it 2 or 3 weeks, and we should see how impactful that is. And hopefully we start to see a pretty significant reduction in new cases. There's a lot of research coming out that proves that mask wearing is really quite effective just in stopping the spread. And obviously social distancing on top of mask wearing stops it even more. So hopefully the things that we're doing in all of these states will help it get back under control and help people get back to work faster as well.
Yeah, certainly fingers crossed on that. Phil, thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.